Well, as I said, I hope you had last week a great week. I mean, it was one of the best trading weeks that we had, and what made me very happy is that most of everyone, or the majority of the people that were with us, actually did take the Swiss trades from last week, and this is something that really makes me happy that some of the people are gaining the confidence in the signal and getting the confidence and getting the courage to actually execute the trades without beginning to think or try to analyze or over-analyze. They're just trading what you see or trading, taking the signals, specifically the ones that we have as a signal, a buy, either a long or a short signal that coincides also with being a structural point. So just to show you a couple of the trades that I want you to keep an eye on, or one of the setups that you can also use in setting or selecting your trades. The portfolio selection, or choosing what to buy or what not to buy, is one of the most powerful things that you can apply when trading the markets. And just by looking, if you will, at the pairs where you have the structural point and the buy or sell point coincide with each other. So for example, here in the dollar CAD, you have a structural point, a structural short 158.40. The short point is 158.40, and you can see that now we are already short. The pound CAD is at 158. If you look at the pound dollar, the initial short that, let me focus on the ones that, if you look at the Aussie yen, the structural short is 84.21 and the short point is 84.21, and now it is trading at 81.18. So that's an additional 100 or 150 pips on that trade. If you look at the Euro Aussie, 133, the structural short and the short point, it is now trading at 130. So you had about 300 pips on that trade. The Euro CAD, that's not the same, but if you look at the Euro Pound, 87.40, and it's now trading at 85 or 86, that's 180 points. You multiply that by 60%, so it's another 300 points. The Euro Dollar, 142.16, 136, that's about 600 pips on that trade. And of course the Euro Yen, as you see right now, we are trading at the 105.91, which is, if you look at the daily chart, we're actually testing historical low, or at least in the latest uptrend, not in the latest move up in the Euro dollars. So just by looking at and I'm showing you this, guys, because it is my way, or it is the way that I can bring to you that you need to populate your radar screen. You need to put these price points on your charts. So if I have, for example, in the Euro dollar, my selling point, you need to place it on your daily chart. You need to make sure that you have your lines on the daily chart, and you also need to make sure that you have those same selling points or your same price points on your intraday charts. So the Euro dollar, for example, the structural point is the 138.60, which is the second selling point. This should be on your chart, so when you execute the trade, or when you see that the price coming to this price point, you do not fear, but you actually do have that as a confirmation, so that you can take the trade and make sure that you're gaining or taking advantage of all the moves that the market are giving to us. So as you can see, we had a brilliant week, and I hope, I mean, we're going to see now, we're going to set up our trades now for next week, and I hope we have also a similar week. So with that said, let's go now to do our basic currencies, and we start with the dollar. The dollar, as you see, has we had again our first buy point was above, or the starting point from last week was above the 74.40, and then we had a structural point which is the 75.95 or 94, and when we broke that we went to the other structure which is the 76.95, and we closed the week at 77.30. The 76.95, this is a structural point, and it is pretty much a trend changing point. At this time, with this close, we can say that the dollar now has reversed its downtrend, and we are beginning to have, based on the daily chart, a trend change. We can say now that the dollar has given us a trend change signal, and that is the beginning of what we can consider a bull market in the US dollar. Having said that, I want to share with you something. Now, we had the break above the structural point with strong momentum. That again is an additional confirmation of the trend change. But as you well know, the trends now do come in different sizes. So that is the trend change on the daily chart. We need also to look now at the second, or the larger phase of the trend, which is the weekly chart. And then the final, when we say now we are in a bull market, is going to be when the dollar index gives an equivalent signal of a trend change. So each time frame is considered the trend in that time frame. So the reason I'm saying this is, let me clarify. If I'm looking at the monthly chart, and somebody asks me based on the monthly chart, are we in a trend change, or what is the trend in the US dollar right now? Based on the monthly, based on the last 10 years, we're pretty much in a downtrend. But we are beginning to get the signals of what we can consider a first stage of a short covering rally. Okay? If I go down to a smaller time frame, which is the weekly, if you ask me the same question again, are we what is the trend now in the dollar index based on the weekly chart? I can tell you, since we broke above the 76.90, we are now beginning to have the first break of the structure point, and that close would be the first indication of a trend change. If we go down to a smaller time frame, I have a very high confidence now that on the daily chart we have now a trend change. So what that means is that this should continue higher. It should go and test somewhere around the 79, and then we might get a pullback, and that pullback will be the retest in the monthly chart, and a break above the 79.05 would be the trend change. But that is a very powerful setup, or a very powerful close in the US dollar, and that today is based upon this week going into next week. That is a very strong buy signal, and we should be looking, as our number one choice is to be looking at buying the dollar, because we have the signals of a trend change on the daily, a trend change on the weekly, and the beginning of a short covering rally in the monthly chart, and all of those are of course going to the upside. So that is a very positive signal, and that's what we should be looking at as far as the dollar. So the dollar, we have three buy signals, one on the daily, one on the weekly, and one on the monthly. So I can put the dollar as three buy signals for the US dollar. Okay, Now, the next one I want to look at, and since I'm looking at the dollar, the the other pair that we know, of course, the other pair, uh, please write your name. I don't know who the JV is. The dollar, the next pair that was actually had the biggest move again, and that's what I'm going to look at, is the euro. And we have discussed the euro from the last several weeks, and I have pointed to you for the last 4 or 5 weeks that it is setting itself up in what is known as the diamond formation. And the diamond formation is, by I think it is the most bearish chart pattern. I mean, that's the number one bearish chart pattern that you can have, and we have broken below the to the downside as of last week from the chart pattern. So the break from the chart pattern from last week was the 142.47, and that break, as you can see, it has given us continuous momentum to the downside, and it just sliced below the 138. The 138 is the, if you look at this here, the 138.11, that is, let me put this, I'm going to do this, this is a very important thing that you need to see. I want to give it, okay, I'm going to use this one here. This, guys, I'm going to give it a different color because I want you to remember this. The 138.10, based upon the index, the 138.10 based upon the index is the break, the break of the structure of the structure. So this is a structure point. If I'm looking at this move, this is my structure point. But in fact, it is my structural point, and it is also the break of the structure of the diamond structure. So it's the break of the structure if I'm looking at a trend change by itself, but in the same time, it is the break of the structure of the diamond, and therefore it is an extremely powerful point. And that 138.10, that's why I gave it a golden color, is going to be our golden price signal, because that we are going to be looking at that for the future, for the next 10 years or so, as the one of the biggest price reference that we should be keeping an eye on is the 138.10 now, based upon the euro continuous contract. Now, we broke through several structure points, and now we close the week at 136.58 based upon the futures contract or the continuous contract. The low of the week is 136.25. That is a normal close, and therefore we should be looking for continuation to the downside, because this is not a squeeze. So we should be looking for a continuation to the downside, and this, now I have a major trend change here on the euro. So the euro per se is going to be the weakest of my all currencies. So I'm going to go to my chart of the dollar, where I'm setting the strong and the weak, and the euro now is my weakest of all. Okay, now the other one I'm going to look at is also the major player that has been now at least a war against its rise in value, and this is the Swiss franc. Again, these are the bona fide pairs that we have, that we have first-hand information on what is going on with these pairs, and that they give us clear tradable signals. So if you look here at the Swiss franc, you'd see that right there we do have now a trend change on the dollar, on the Swiss. Right at the 121.14. So on the daily we do have a trend change for the for the Swiss franc, and that is to the downside. We are getting the momentum and sales to the downside. This is continuing, and the close we have now 113.10, and the low is 112.83. That is also a good close and would suggest continuation. If I look at the weekly for the Swiss, it has broken through two structure points and it's really continuing to the downside, so we should be looking probably for a continuation towards the 107. So in this case we have an additional 400 points to the downside based upon the basis. Okay, if we look at, so the Swiss and the Euro are pretty much quite clear how they're working or what's happening with them. If we look at the yen, with all the move that we had in the dollar index, we really have no selling in the yen. If you look at this, we have traded right below the 129.56. We closed at 129.10, and even since we have broken through this structure point, we really did not have any follow through to the downside, so that is not a sell signal, if you will, and it is an indication of how strong the yen is. This is a genuinely strong pair. This is fundamental. I mean, if you want to compare the difference between a fundamentally strong pair and a technically strong pair, I think this is a unique moment. Let me share, because this is one of the times that they are very rare that you can see this on the chart. If you look at the dollar index, this is a strong currency. It is moving to the upside, but that's the beginning of a trend change, and now that trend change is accompanied by short covering. It is accompanied by people reversing their position, so you're getting a lot of technical buying coming in to that currency. So it is not, I cannot say it is fundamentally strong, but because if I look at the monthly chart, you can see that we still are in a, let's say, a bona fide downtrend. So it is strong, but it is not fundamentally strong. I mean, it's still in a bear market or still in a downtrend. But if you look at the yen, with all the selling and the technical selling buying that's coming into the dollar, this one has not been affected. If you look at the euro, you can see the capitulation in the euro, the weakness. If you look at the Swiss, you can see the capitulation in the Swiss. If you look at the British pound, you see the weakness in the British pound. If you look at the Aussie, it is beginning to give me a trend change. The only one that is holding its own, which is fundamentally strong, and that means when the move settles, that will be the first one that should give us a continuation to the upside, is the yen. So the yen is the only currency that we see here right now that's giving us a look of a fundamental strong currency. Okay, so we're going to go back now and we're going to say that the next currency that we're looking at it in a strong point would be the Japanese yen, and I am giving it 3 pluses, not because it's just because that the dollar is now strong, and it is technically strong, so the dollar is having technical buying. The yen is strong, but it doesn't have any technical buying, so it is going to be my first selection would be the dollar, and then if I have to look at another thing I will be looking at to buy would be the Japanese yen. If we look, as I said, we did the euro, we did the Swiss franc, we did the yen. Now if you look at the British pound, it is also in a pretty weak situation. It has broken below the 159.40, which is coincides with the 159.80 on the spot cash, and we close at 158.60. So that again, we also have a downtrend, or a bona fide downtrend, in the British pound. So the British pound is also weak. And if you look at the Australian dollar, traded closed the week at 104.30. We have a small structural point of 104.60. I mean, that is, if I'm looking at again to change that trend, I mean that is now, it is not a trend change, but it should give me a thrust to the downside anywhere towards the 102.83. So with that, in order to wrap the choices, the strength and the weakness, I'm going to be looking at the dollar to buy the dollar. I will be looking to buy or let's say short the euro dollar. I will be looking at, I'm going to leave the dollar yen for now. I will be looking at the other negative currency I have is the Swiss franc, and I have the Canadian, and I have the British pound, and all of these are giving us technical sell signal. The euro is giving us a major negative sell signal. The Swiss is also giving us a major sell signal. The British pound and the Australian dollar and the Canadian. So anything I want to be looking at with reverses to the dollar right now, I will be looking at buying or short the euro Swiss dollar. I'll be looking at the dollar Swiss long. I'm looking at shorting the pound dollar. I'm looking at shorting the Aussie dollar, and I'm looking at going long the dollar CAD, and I'm going to leave the dollar yen to the end unless I get a major buy signal in the dollar yen. I can also look at the other pairs with regards to the euro Aussie and the euro pound. So if I'm going to look here, I can go euro pound, I can go short euro Aussie. The euro Swiss and the euro dollar, both of them are very weak. So if I'm going to do anything, this is exactly like what we appeared last week when we did our homework in the last trading session. The euro was short against every single pair, but it was only had a buy signal against the Swiss, and it's the same thing happening today. The euro is short negative against every other pair except the Swiss. So Laura, it's the same thing like we had the discussion last week. You can go short every pair with the euro, but you are looking at, if you're going to, if any pair you want to go long at, is you're going to go long the euro Swiss. Okay. uh, so now we're going, these are basically, we're looking at being long the dollar and primarily short the euro and primarily short the Swiss, and then we're going to combine the others and find which ones suit us the most. Okay. uh, by a quick look, for somebody was, we're going also to look at the stock, the S&P. We're still in a negative, in a downtrend as far as the S&P, and we're looking for a continuation to the downside. If I'm going to look at the precious metals just to get a feel of things, gold is now trading at the 1859. So I would not, the question that was being asked by JV, will make a pullback in the dollar, in the gold. No, I do not think so. And just by evidence of what you see on the week on the gold chart, people now, there were two strong safe havens. One was the Swiss, and the other is the gold. Since people now are being forced out of the Swiss franc, they have no other option but gold, or silver for that matter. So you might get a slight pullback, but technically, as you see on this chart, that is no trend change. There is nothing negative here. We don't have any sell signal. So as it stands now, we're still going to be long or holding long. So that is a good sign, and that indicates also weakness that should be appearing in the Swiss, because with all the major up move in the dollar, we didn't have any pullback in the gold. Okay, so let me save the recording, and if anybody has any question, you can ask